Hello ladies and gentlemen, welcome back to the channel. In today's video we are going to be taking a look at the various Schwab index funds that I have in my portfolio and ones that I think are good to put in any portfolio, especially things as a Roth IRA, which I have made a video on talking about what all I have in my Roth IRA, and this is currently the majority of the mix in there. But before we get into it, go ahead and smash that like button if you haven't already. That's the best way of showing your support for the channel. It really helps push this video out to other viewers, and I think it's going to be a very beneficial video for people who are either A, new to the Schwab platform, or B, new to index funds as a whole, kind of how to analyze those index funds and stuff like that. And then also, if you haven't already, subscribe to the channel as we continue our climb to 1,000 subscribers. And hopefully we'll get there by the end of the year. So let's get right into it. So the first one I have in my Roth IRA, the first mutual fund that I want to talk about from Schwab, is their premier Schwab S&P 500 Index Fund, ticker symbol SWPPX, with a net expense ratio of 0.02. That is very low. And this one and all of these are actually no load mutual funds, which what that means is the initial investment is only $1. I know there are some mutual funds out there that in order to buy into them you have to pay $1,000 initially, or initially invest, not pay, or $3,000 or even $1 million to put money into some of these mutual funds. These are all no load, so these are great for beginning investors. So the fund's objective, the fund's goal is to track the S&P 500, is to track the total return of the S&P 500. Highlights a straightforward low-cost fund with no minimum investment. That's what we just covered. The fund can serve as a part of a core of any diversified portfolio. That's big time. Anytime you're looking at S&P 500 indexes, you want just that diversity, simple access, I should say, to 500 leading U.S. companies, and captures approximately 80% coverage of available U.S. market capitalization. Invests in some of the most well-known U.S.-based companies. And in a minute, when we look down there, you will see some of that total net assets of this one of $45 billion. I believe that is, yes, $45 billion total net assets. Once again, net expense ratio of 0.02, no minimum. And then you can continue looking. The total, what it's listed at currently, and this gets updated daily, is $52.44 for a quote-unquote share of this mutual fund. 508 total holdings, which is exactly what the S&P 500 is. And then it's a large cap blend, obviously passive management style, which means no one's really actively sitting there trading, trying to get the best portfolio composition for that. But obviously with an expense ratio that's so low and a no load fund like this, that's kind of what you can expect. Just some other things, beta of 1 because it's exactly the same as the market. And then, distribution yield of 1.61%, which is the dividend on this stock. You come down and look at it compared to the S&P 500 index as a whole, just slightly off of that year to date. In the 3 month, it's actually beating it. In the year to date, obviously those two numbers balance each other out since its inception, and I believe that was in the 90s. Yes, if you look down here, 1997 was when this fund was created. It has returned an average of 8%, which is about what you can expect from the market. You love to see that. Obviously, that's a good thing when compared to the large blend Morningstar category. It's clearly performing much better than other large blends, which is always nice to see. We can scroll past a lot of these. These are some basic stuff. If a $10,000 investment was made in 2010, I believe it is the blue one, yes, you would have $37,411 in this mutual fund. Obviously, here's the price performance over the course of the last several months. Hit heavily here. This would have been a great time to put in a lot of money. And then you look down here at some of their holdings. Obviously, the biggest company is Apple. Then you have Microsoft, Amazon, Facebook, Alphabet, or Google, Berkshire Hathaway, Johnson & Johnson, Visa, and Procter & Gamble. Those are the top 10s. And then Schwab does a really good job of breaking down the various sectors. Here's the market cap breakdown. Most over 64%. So again, it is a large cap. The biggest sector they are currently invested is in information technology, and that's no surprise there as well. So that really breaks it down here. Have some cash investments, some other, but again, the vast majority are in stock since it is an S&P 500. The next stock, and me personally, in a Roth IRA like this, I would recommend putting these 25%, 25%, 25%, 25%. And it's just a really good way of being diverse. When you throw in an international index fund / mutual fund into something like this, it's just really something that, say the U.S. stock market crashes, obviously that's going to affect these stocks as well, but it could help be as a little bit of a shield to protect you against some other, not completely falling off the cliff with the U.S. stock market. So this one is the International Index Fund. Like I said, ticker symbol SWISX, net expense ratio of 0.06. Again, very low. The fund's goal is to track the performance of a benchmark index that measures the total return of large publicly traded non-U.S. companies from countries with developed equity markets outside of the United States. It's a straightforward part of a diversified portfolio, simple access to large equities, invest in large companies across 21 developed markets in Europe, Australasia, in the Far East. Okay, this one was once again its initial inception was 1997. About $6 billion in net assets in this one. Expense ratio 0.06. No minimum investment. All things you really like to see. Price of one share of this is $19.79. Turnover ratio 7.04. Foreign large blend. Once again, it's going to be passive, and I believe all of these are going to be passive, with a dividend ratio of 3.23%. When you compare it to some other of these foreign market funds, if you will, I believe this is the one that it's directly related to. Actually, I think it might actually be this one that it's directly related to. Obviously, it's lagging a little bit in terms of these things. This isn't my favorite fund of the ones I have, but obviously, when you're investing in international companies, obviously these are still good companies, but it's more of like a safety play. So I'm not mad at that 4.2%, or even that 5% 1 month, or the 11% 3 month. Obviously, we're down on the year for a lot of these things. And then just some filings. If you invested $10,000 10 years ago, this would be worth $16,000. Okay, nothing too special there. The biggest investment in this company, or in this mutual fund, is Nestle. Then you have Roche, Novartis, and then you have SAP, ASML, some other companies, Toyota, AIA. Okay, you have some other companies there. The biggest sector, once again, is going to be, well, I guess in this case, it is financials, which is very interesting to see. You got financials, industrials, healthcare leading the charge for a mutual fund like this. Once again, mostly in stocks. All of these are going to be mostly in stocks. The biggest country that this is currently invested in is Japan. 25% of this portfolio is in Japan, which, I absolutely have no problem with that being in. I have no problem with that being in any of these companies or any of these countries. And then obviously, once again, towards the larger market cap on these. Then we're going to skip one. We're going to move this one over to the mid cap fund. So we have a large cap, we have an international large cap. This is the mid cap. If you don't know what that means, usually it's within let's say a market cap of 1 billion to 10 billion. That's what I would consider mid cap. Maybe a little bigger, but of course, ticker symbol SWMCX, net expense ratio of 0.04, very low. The fund's goal is to track the performance of a benchmark index fund that measures the total return of mid-capitalization U.S. stocks, no minimum investment, convenient low-cost way to capture the mid-cap segment. So it's just another good diversity play. This one is actually, its inception was 2017, so a very new mutual fund here, carrying on some of these other things. It's mirroring the Russell Mid-Cap Index, is what it's mirroring. 811 total holdings. That's something I need to check over here on the index fund for the international. How many holdings does this have? Yeah, 931. That's about what I would expect. Passive mid-cap blend. Okay, all things you like to see. 1.4% distribution yield. Since its inception, it's yielded about 6.48%. Okay, that's fine. Keeping up with the Russell Mid-Cap Index, obviously, since it is currently mirroring some of those things. They looked at some of the tax forms. If you had invested in this at its inception, okay, so that's not quite there. I guess they don't have that out yet. Maybe this is, yeah, so this is it. If you invested at its inception, you would have $11,799. If you invested $10,000, obviously it appears that's up to par with the Russell Mid Cap Index, if not just a little bit off. The biggest holding in this fund is Lululemon. 0.4 or 0.53%. Then you have DocuSign, Viva Systems. Then you have Spotify down here. Chipotle, O'Reilly Automotive. So all these bigger companies that I'm sure you guys have probably heard of. Let's see what the biggest one in here. So once again, information technology. That's something you can just expect at this point. 99.53% in stocks. So once again, you have that obviously lower region, I believe that is billion to 15 billion, and then 15 billion to 70 billion. You have some of those things there, and just a little bit to go underneath that. Next, we have the small cap. So here we are wrapping it up here. We have the S&P 500, which is a large cap. The index fund for the international, which is again a large cap. Then we have the mid cap, and now we have a small cap. These are usually right around $1 billion or lower. Ticker symbol SWSSX. Net expense ratio of 0.04, and I think why you see a fund like this have a slightly higher one is obviously because they have to deal with some international things. Fund's goal is to track the performance of a benchmark index that measures the total return of small capitalization U.S. stocks. Obviously, some of those other things invest in 2,000 small cap stocks, so much more quote unquote diverse, much more options here. Once again, its inception was on that same date in 1997. No minimum here. Russell 2000 index, 2003 total holdings as of August 31st of this year. One share of it is 27.12, and obviously in a Roth IRA, since there is no minimum, or I guess in any account for this, when you see this total price, say you want to put $5, you invest $20 a week into your Roth IRA, and you put $5, obviously you will own a fraction of this mutual fund. You won't own the whole thing until you put $27.12 into this. So this is a small blend, passive once again with a 1.51% distribution yield. Then you look since its inception, 8.29%. This is kind of where you want to see more of that growth. You see that 12% there. I do like to see that. 10-year total return on it is 11%. You do want to see some of that growth from some of these smaller capitalization stocks due to the fact that they can be slightly more risky. So you do want to see a little bit more of a return on these things. If you put $10,000 into this since its inception, or I guess since 2010, you'd have $26,000. So you'd over double your return on that. Which is clearly a very, very good thing. Price to performance, okay. Some of the top holdings here, you have Penn National Gaming is the biggest holding. If you guys don't know what this is a gambling company that recently bought, I believe, like 33% of Barstool Sports, and their stock price has skyrocketed. It's absolutely crazy. Then you have Churchill Downs, Novavax, Caesars Entertainment, BJ's Wholesale Club, and Decker's Outdoor, just to name a few there. We're looking at the biggest one here is healthcare, 20% in healthcare, 16 in financials, and 14 in industrials. Once again, the vast majority in stocks. That's what you can expect. And then in here, you have no stock over, I guess you kind of have a little in that 15 billion to 70 billion range, but you have the vast majority in that 1 billion to 3 billion range, which is what you can expect from a small market cap index fund. So all in all, obviously, if you guys want me to do a video on some of these mutual funds that and kind of break them down more in depth one by one, you know, I can do that for you. Leave that in the comment section below. Obviously, these are all great funds. Schwab does a really good job of sort of just laying out what their funds pertain to. I've looked at some Vanguard funds, and I find the Vanguard website a little difficult to use, but maybe that's just me. But I do personally really like all of these Schwab funds, and I believe they all do a good job. They all serve their purpose and do it well. So leave a comment in the comment section below if you guys are invested in Schwab. Once again, this is just my opinion. You guys can take it or leave it. But I really appreciate you guys for watching this video. If you haven't already, go ahead, smash the like button and subscribe to the channel if you haven't done so already, and we'll continue producing more great content for you guys. So thanks again. Until next time, happy investing.